Happy Friday, Brian Manning here with your weekly update. Let's get right to it. Monday was a quiet day, not much going on. Markets didn't move very much, so stayed a little stagnant there. Tuesday, we got retail sales. Retail sales came back better than analyst expectations, and leading the way in retail sales was auto sales, bars, and restaurants. And a lot of analysts think this really has to do with lower cost of the pumps, cost of oil going down, freeing up a little bit of money for people. Certainly making auto sales more appealing, having a little money left over for restaurants and bars, so retail sales certainly seeing some growth there. Wednesday this week we had the CPI report, and we had talked about this and some other updates that we've done. CPI is one of the Fed's gauges of looking at inflation, and CPI is the Consumer Pricing Index. And so for the month of August, the CPI was up 0.1 or 0.1%, and when you strip out the volatile items, the core rate of CPI was up 0.1% as well. So that theoretically means that costs of goods that we purchase as consumers in the month of August increased by 0.1%. So what happens is the CPI reading looks at inflation over the last year. So right now, or prior to this, we had inflationary readings that went from August of 2014 into July of 2015. So now this August reading replaces the August 2014 reading that we had. In August 2014, inflation was at 0.0%, so flat. So coming into this report, our inflation was at 1.8%. Now we replace August 2014 with August 2015's report, and so that's an increase of 0.1%. So CPI inflation has now gone from 1.8 to 1.9%. So seeing a slow and steady increase on inflation there. Also Wednesday this week started the Federal Reserve meeting. Been big talk all over the news, of course. Federal Reserve came out yesterday, said they were not going to raise rates, and certainly mixed emotions there. You know, I think Janet Yellen's comments were minimal, yet led to a lot of concerns in the markets. And many investors were probably looking for a rate hike because they wanted to see the Fed was confident in the markets and what they were doing, and trying to keep a lid on everything. And I think many investors are just nervous right now based off of the Federal Reserve's concerns over the markets globally, and as a result not raising rates. So right now stock markets are down significantly based on this, and mortgage bonds have reacted favorably though. And when investors are nervous, money moves from the stock markets into the bond markets, and when that happens, that's favorable for bonds, and that also causes mortgage rates to go down. So we've seen a nice improvement in rates from beginning of the week through today, about a 0.25% improvement. So, you know, nothing huge, but certainly good. Right now, though, we just need to be very careful because mortgage bonds move up and down in their prices, and they trade in between what's called the floor of support and a ceiling of resistance. And right now, we are at a very strong ceiling of resistance, which is the 200-day moving average. So what that means is if the mortgage bond prices can break above this ceiling resistance and keep going up, mortgage rates can go down. If stocks start to rally, though, and we lose some traction we have here in mortgage bonds and they reverse, then we'll start to see mortgage rates decline a little bit or not move in our favor. So we'll have to wait and see what happens. In addition, inflation is the biggest enemy of bonds, and with the Federal Reserve not raising rates yesterday, that's kind of the Fed not putting a cover on inflation for the future. So in the near future, bond traders are going to be very much aware of this. They're going to watch what's happening in the markets, and any news of upcoming inflation certainly could lead to higher interest rates. I wouldn't expect huge jumps in interest rates, but with inflation slowly increasing and the Federal Reserve not putting a cap on it, any inflationary news that we get will probably lead to slightly higher rates. I will be around all weekend. If you have any questions, give me a call. If you have buyers that need to get pre-approved, give me a call. I'd love to be part of your business and help you out any way we can. Have a great day.